Good afternoon, ladies and gentlemen. My name is Jean, the Regional Director based in Enterprise Singapore's Ghana office covering West and Central Africa. Thank you very much for taking the time to attend this webinar on West Africa's digital landscape, opportunities in Ghana and Nigeria. For those unfamiliar with Africa, the continent consists of 54 countries, and by 2050, it will account for half of the global population growth, of which 30% will reside in the West. This year, to further highlight the potential of the African continent, the Enterprise Singapore Africa team will also be hosting the 11th edition of our Africa-Singapore Business Forum from 29th to 30th August in Singapore. This will be a physical event, and we do look forward to our Singapore companies participating to learn more about the developments in Africa and to do B2B exchanges with the African delegates too. Further details of the forum will be flashed later at the end of the webinar. Now, Africa as a whole has one of the fastest growing mobile phone penetration rates in the world. By 2025, mobile connectivity is expected to reach 89% of the total population. The mobile industry will contribute an estimated US $154 billion to the continent's GDP and create about 400,000 direct jobs. This growth in digitalization and innovation creates a dynamic startup ecosystem, which backed US $3.3 billion in investments in 2022. A 55.1% increase compared to 2021. West Africa, home to Ghana and Nigeria, leads the digitalization and innovation space in Africa and has the highest amount of startup funding on the continent. Prominent verticals include fintech, e-commerce, retail tech, edtech, agri-tech, logistics tech, healthcare, technology, IoT, and of recent times, data centers. Fintech is also helping in financial inclusion as about 57% of West Africa population is unbanked. Given Nigeria has one of the highest unbanked rates compared with the consumption potential, its fintech industry has seen the largest investment of 535 million in 2022 in the sector across Africa. The dynamic fintech ecosystem, along with the COVID-19 pandemic, has spurred growth in other tech verticals such as e-commerce, education technology, healthcare technology, logistic tech, etc. Highly trained tech personnel are also required to propel the region to the next level of digital transformation. This various developments in the different technology space presents an abundance of opportunities for business with the aforementioned solutions that will suit these tech verticals for Singapore companies to then tap into. So without further ado, let me introduce my colleague Clement, who will take us through the latest updates for the West Africa's digital landscape. Clement, over to you, please.
Thank you, Jean, and welcome everyone to today's session. I'll do a quick run through of this morning's the outline for today's webinar. It's morning here, so pardon me as I say this morning. So for this, we've had Jean do the welcome remarks, and I'm going to go ahead with the presentation. Then we'll have some questions and answers, and we'll bring this webinar to a close. So once again, I thank you, Jean, and it is a great pleasure for me to be the presenter for today's session and on the digital landscape in West Africa, where we'll focus on opportunities in Nigeria and Ghana. For the presentation, we are going to look at Africa's mobile connectivity, impacts on digitalization, economic growth and innovation. Then we move on to look at West Africa's contribution to the whole digital landscape on the continent. Then we take a few sectors, which would be fintech, e-commerce, e-health, edtech. But we would also be taking more questions across the various sectors towards the end of the Q&A session, and we'll be happy to take on one-on-one conversations with companies that are interested in opportunities in our region after the session. Africa is a budding market for tech innovation and adoption. The continent has seen 17 times growth in startup funding since 2019 and has raised 7 unicorns in the same period. The continent is vast with over 1.3 billion population in 54 countries across 5 regions. The demarcations in Africa is usually divided according to the north, south, east, west, and then the central. Africa has one of the world's fastest growing mobile device market. This is largely driven by the growing population and urbanization. The continent's population is expected to increase by about 200 million by 2025. And that is just like adding Thailand's population each year to the continent. And this population is expected to have about 73% being under 35 years. According to GSMA, the continent has about 900 million mobile subscriptions, and this excludes IoT devices. This mobile subscriptions is expected to reach 1 billion by 2025. Also, 4G access is expected to almost double to 33% from 17%. At this stage, then also same in 2025, we expect that there's going to be about 41 million devices that will be connected to 5G. The size of the population and the demographic structure makes Africa a very attractive market for mobile operators and device vendors. About 40 to 50 million phones are shipped to Africa each quarter. In Q1 2022, about 19.9 million mobile phones were shipped, smartphones actually were shipped to the continent. And Chinese manufacturer Transsion is the leading phone vendor in Africa with their 3 brands, Tecno, Itel, and Infinix. Its nearest rival is Samsung, which has just about 20% market share. As consumer spending is generally low on the continent, there is high demand for mobile devices, and there is an active demand for second-hand devices, both refurbished and then used. So the second-hand market for Middle East Africa is expected to grow from about 5.3 billion last year to 12.4 billion by 2030. Apple and Samsung are the most preferred second-hand devices. Comparing second-hand devices to new phones, about 30% of the market is actually for second-hand or used phones. With the use of mobile devices and improving mobile connectivity, mobile data consumption in sub-Saharan Africa is also expected to grow from an average 3 gigabytes per person per month to about 11 gigabytes per person per month. This represents almost 4 times growth compared to the 3.3 times global average growth. The growth in data consumption will be mainly due to online gaming, live streaming, and cloud storage services. The number of gamers has more than doubled in the last 5 years to 186 million people on the continent. 95% of gamers across the region play on smartphones or tablets as opposed to consoles and computers. South Africa has the highest number of gamers, representing 40% of its population, followed by Ghana with 27%, Nigeria 23%, and Kenya 22%. 34% of gamers pay to play, and gaming revenues on the continent is estimated at about $600 million as of last year. For live streaming, according to Conviva, live streaming growth in Africa is almost 2 times the global average, with markets like Nigeria recording 273% growth in 2021. This presents opportunity for live streaming solutions, platforms, and content. With increasing digitalization, Africa is pushing for more cloud storage. The continent currently has about 91 co-location data centers, compared to about 1,800 in the USA. This is also another opportunity for Singapore companies to provide services and solutions that enables the use of data centers and cloud storage services. Mobile connectivity is actually driving digitalization, economic growth, and innovation. In 2021, mobile technologies and services generated about 8% of sub-Saharan Africa's GDP. And this amounted to about $140 billion in terms of economic value add. The mobile ecosystem also supports more than 3.2 million jobs, both directly and indirectly, and also contributed about 16 billion in terms of taxes that were raised in the sector. By 2025, mobile contribution will grow by approximately 16 billion to have the total impact on the economy reach about 155 billion. And this is due to the increasing benefits that the country is getting from increase in or improvement in productivity and efficiency that mobile connectivity brings. Shifting our focus a bit more to West Africa, West Africa has the largest ecosystem on the continent. It is home to 203 out of about 643 active tech hubs on the continent as at 2019. South Africa is more advanced in terms of ecosystem infrastructure, but Nigeria has the numbers. About 80% of tech hubs on the continent are either incubators or co-working spaces. This relatively affects the rate at which startups are accelerated. West Africa raised about 1/3 of the continent's startup funding, with Nigeria in the lead. The big four countries, which are Nigeria, Egypt, Kenya, and South Africa, continued to lead, but their share declined from 81% in 2021 to 76% in 2022. Their share is expected to further decline as more countries join the fundraising league. Ghana and Tunisia has shown impressive growth, but this is too early to conclude which of them would add up to become the big five. Also, West Africa is home to 4 out of 7 unicorns that has been raised on the continent. When it comes to Ghana and Nigeria and their impact on the West African ecosystem, Ghana and Nigeria are the key markets in West Africa. They constitute 60% of West Africa's population and 69% of the sub-region's GDP. They contribute 97% of startup funding, 89% of startups that are funded, and 57% of tech hubs in the ecosystem. The two countries actually have about 238 million mobile phone connections and about 145 million mobile internet users. This makes both countries very good market for phone and app-based solutions or services. Ghana has more mobile subscription than its entire population. This is because most of the working class either have 2 phones or use 2 SIM cards. West Africa as a whole currently has about 16 co-location data centers. 7 new data centers are expected to grow or to come up my apologies. 7 new data centers are expected to come up in Ghana and Nigeria between 2022 and 2024. 80% of data centers in Nigeria are either on gas power generators or have plans to do so due to the unstable grid in the country. Shifting from the market a bit more to the sectors, then fintech remains Africa's tech most powerful force, but growth is actually across all the various sectors. You know, in West Africa, just like the rest of the continent, fintech is the most powerful force. About 205 fintech startups were raised 1.4 billion, accounting for 44% of the continent's fundraise last year. However, growth in the ecosystem is across board. Last year, Restaurant tech had about 29% growth. And this growth is largely due to two companies, VendEase and Order Africa. VendEase raised about 30 million and Order Africa raised about 4.5 million. And both of these are into food service management solutions. For auto tech, entertainment, transport, and recruitment tech also recorded growth of at least 100%. For the rest of this presentation, we will focus on fintech, e-commerce, e-health, and edtech. However, we'll be happy to answer questions from all sectors during the Q&A and also take on conversations in particular sectors of interest for each of these companies. So looking at fintech, the future of payment in West Africa is anchored on wallets and mobile money. Offline payments dominates in the sub-region, but online payments are really growing fast. Fintech solutions in West Africa are very diverse. The 2022 Nigeria FinTech map featured 236 companies under 14 categories compared to 184 companies in 2021. Ghana also featured about 80 fintech companies across 16 fintech categories. Despite the wide diversity and the fact that payment and remittance companies make up about 60% of fintech solutions, offline payments still dominate in West Africa. About 80% of payment in the region is made offline, and this is expected to decline gradually, giving room to digital payment. Digital payments are expected to grow by a cumulative annual growth rate of about 16% from 4 billion in 2022 to about 8 billion by 2025. The growth in digital payments will be driven by government policies in one part and market innovations. For instance, Central Bank of Nigeria's Naira Swap program led to a 46% growth in e-payment last month. Also, the implementation of interoperability platforms such as GIPS, which enables movement of funds across wallets, banks, mobile money, and other platforms, is encouraging the use of digital payment. With a huge SME market, which transacts largely offline, fintechs are embarking on intensive market acquisition by bundling value-added services with payment solutions. SG companies, Singapore companies that have value-added solutions may want to look into this opportunity. Also, both Ghana and Nigeria have implemented improved ID systems, which are more reliable and allow easy onboarding of users. Some startups are deploying non-cash solutions to enable transactions. For instance, SosoCare, which is a fintech in Nigeria, enables clients to exchange recyclable plastic waste for health insurance. This is more of a barter system, but the value of the trade is now being captured. More users are also opting for digital payments due to the lending and financing ability it presents. Same in Nigeria, we have a fintech startup called Kwaba. And this company enables clients to build savings and also leverage on their savings culture to borrow from family and friends who are also on the platform. Such platforms are encouraging people to be able to bring on their families and friends and then enable that form of lending. So all these put together is expected to drive a lot more of digital payments or online payments in the sub-region. Now, looking at the wallet, actually, wallets are expected to have the fastest growth in the sub-region. Also, same applies to the continent as compared to cards. In the sub-region, there are mixed payments. And when these payment options vary from market to market. If you go to Ghana, the dominant form of payment is wallet, while in Nigeria, it's bank-to-bank transfer. However, wallets are going to grow faster because wallets, as we have it in the region, have lower KYC barriers. They have quicker first use setup. They have increasing usability and lower costs. And this is accounting or enabling more people to want to opt for it. Also, wallets in the region have moved from what we call wallet 1.0 through wallet 1.0, which was actually more like P2P based, cash in, cash out, and has actually evolved to wallet 2.0, which was enabling some form of bill payment, paying for utilities, accessing basic loans, and some level of insurance. Now this has grown to wallet 3.0, where we have apps that are enabling some form of in-app shopping, access to services, integration to online marketplaces, and the likes. So with this increasing usability, more people are opting for wallets. Also, e-wallets are integrating with mobile money and national settlement platforms. So by this, individuals can move funds from their account to their wallet, from their mobile money to their wallet. Just to give an understanding of mobile money, in the region, mobile money refers to telco based. So telcos have like their own form of wallet that you use, and it's actually linked to your mobile number. So by this, all mobile phone users or everyone who has a mobile number indirectly has a mobile money wallet. All they have to do is take a very easy few steps activation, and then the telco sets them up. Comparing the figures, we see that in terms of transaction growth for the continent, wallets are actually going to move revenues from 23 billion in 2020 to about 88 billion, whilst the cards are going to move revenues from about 12 billion in 2020 to about 41. Now, in terms of electronic transfers or bank-to-bank payments, we are expecting the revenues to actually move from about 18 to 59. Banks are a very key player in the whole fintech ecosystem. So we just trying to understand what the banks are doing in this space at the moment. Banks are prioritizing investment in broad and foundational capabilities when it comes to emerging technologies. What we have to understand is that in this region, banks like to deal with fintechs at an arm's length because they are not still so sure about the industry. So they would like to partner the fintechs, but they do not necessarily want to have them as part of their core operations for various reasons. With banks prioritizing investments in broad and functional capabilities, we've seen that banks are enabling more API access for third parties to integrate financial products. This is to help them to be able to provide embedded finance. In Nigeria, there is an association, more like a not-for-profit organization called Open Banking API, where they are developing various API standards that the banks are comfortable with. And this is all towards helping that fintech bank collaboration, but still with some form of very clear distinction between the two. Banks are also leveraging emerging technologies such as chatbots and other forms of AI to engage customers. The banks are partnering with cloud delivery models, and this is changing how they deliver value to their clients. We've had leading banks such as EcoBank and UBA Bank PLC partnering with IBM for cloud and AI solutions to be able to accelerate digital innovation and ensure seamless and secure digital banking experience. West African banks at the moment, as I mentioned earlier, are interested in partnerships with payment, e-commerce, credit lending platforms. Some are already investing or planning to invest in such payments or such solutions. However, their immediate focus is enabling micro savings and bank buy now, pay later solutions. This is because there is a huge catchment of informal players which they are not able to access, and they believe that these partnerships would help them to be able to reach that big retail or informal market. One big challenge for the banks has also been collaboration with third parties and then ensuring data interoperability, as to which data goes into their system and comes out of their system. This is a very big challenge, and Singapore companies with solutions in these areas should consider this. So looking at the whole fintech ecosystem, there is a huge underserved SMEs, which is an opportunity of growth for fintechs. But cybercrime is a major threat to the industry. The strength of the fintech sector is that it's enabling financial inclusion, which is acceptable to both the users, regulators, and the stakeholders themselves. Also, the growing mobile penetration is enabling that use of fintech services. The beauty, or one key good thing on the fintech space when it comes to West Africa, is that the various stakeholders are also working together. Banks, telcos, insurance, the fintech companies themselves are coming together to build that ecosystem that is needed to be able to grow this. And Ghana has a very good example where there is total interoperability between fintechs, with telcos and banks when it comes to settlement of transactions. The weaknesses in the sector are that it's become an easy avenue for money laundering. In West Africa, if you go to a typical bank to deposit anything above 5,000 US dollars, you are going to be asked so many questions, even if it's your own account. However, when it comes to fintech, especially for the payment side, you are not asked any questions. You move the funds from wherever you got it from to your card, and you can just go spending it. So locally, we've seen some cases of money laundering come into play. Also, there is the fraud risk, which is associated with some of these solutions, because people find innovative ways to be able to deceive customers and fraud them in various ways. Looking at the threats, cybercrime or cybersecurity is a key threat to the industry. Recently, there was an alleged security breach at Flutterwave, one of the unicorns actually from Nigeria, and it's said that there's about 4 million USD that cannot be accounted for. The fintech is obviously going to say this didn't happen. Industry players are saying this did happen, but these are threats that we have to take note are facing the industry. In terms of opportunity, there are several opportunities. There is the opportunity for intra-Africa remittance services and FX services. Most of the remittance services that we have and payment services that we have are actually looking at P2P, and then remittance is also looking at cross-border in terms of movement of funds from other parts of the world into Africa, because Africa is a well-known remittance destination. However, in terms of moving funds from Africa or between African countries, there is a huge gap. And this is where we can all, as Singapore companies, look to come together and solve. Also, FX is a major problem in this part of the world, and companies with solutions on how SMEs, even banks themselves, can manage their FX position, give live rates to customers is very key. There's also a growing demand for digital onboarding, eKYC, AML, and other forms of credit assessment. There are opportunities for digital collateral management. There are also a lot of opportunities for investment, either debt or equity. In this area, we actually expect to see consolidation happening, because for a market like Nigeria, where they have over 200 fintechs playing in, over 60% of them, which is over 120, actually playing in the payments space, there's definitely going to be the need for some consolidation to enable us have some major players who can then expand into the sub-regions, other parts of the continent. So we see that bit coming up. And then opportunity, again, we still have a lot of opportunity for data security, data optimization, and data analysis. Moving on to e-commerce. E-commerce and retail tech companies are actually building integrated systems to meet customers' needs. Let's take an overview of the digital commerce of fintech ecosystem in the sub-region. There are about, e-commerce penetration is currently around 42 million. When it comes to online marketplace visits, Ghana is having about 50, and then Nigeria is doing about 76 million users. In terms of devices, mobile devices or mobile phones continue to be the #1 device for accessing e-commerce, with Nigeria doing about 87%, and then Ghana doing about 75%. The market is expected to grow to reach about 20 billion for Nigeria by 2027, and in Ghana is going to reach about 1.3 billion. And the cumulative average growth rate is going to be about 15%. Electronics, food, and fashion are the leading products or categories that is purchased the most. In terms of payment, as I mentioned earlier, cash on delivery seems to be a very big trend. However, we expect these ratios to have improved especially following COVID. The bulk of e-commerce shoppers are actually between the ages of 25 to 34 for both markets, and they contribute about 35%. And the leading marketplaces for both markets are Jumia. However, it is worthy to mention that in Nigeria, Konga is also a significant player. So when it comes to e-commerce in the sub-region, it is also quite well diversified. But starting from how these e-commerce players are formed, there are less than half of the e-commerce companies that come up in West Africa have actually been incubated. So we see that this is causing some slow growth. The acceleration is very slow because very few are already being incubated or accelerated. So it makes it difficult. They start and they're still at a small scale, and makes it difficult for them to scale and then grow. When it comes to the relevance of the sector, it comes in second for job creation. It employs about 3,100 people in Nigeria, and we have key players like Alezo, Slots, Omnibus, and Trade Depot being some of the leading employers. For new entrants, there's retail tech, or these e-commerce players are helping physical retailers to digitize and scale their operations. We have retail tech startups such as Feeder, which are providing no-code e-commerce website for clients. Also, we have a company like Catalog, which provides distribution engine for access to print and digital books. So in the same ecosystem, the products being offered really varies. There's also a Nigerian startup called ShopTrio, which has launched an online B2B marketplace for African informal retailers and vendors who want to specialize in African-made products. Some of the key trends that we are seeing in the market, we see that the West African startups are partnering with global tech giants to redefine areas like social commerce to mainstream e-commerce. In the region, you need to understand that a lot of people sell on Facebook, Instagram, and the likes. However, with players like Bumper, which helps the social commerce or these social media commerce players to be able to transition from being that informal, being that unstructured to mainstream e-commerce. They provide them with an e-commerce store, they provide online and offline payments, they help them to manage in the inventory, one same solution, helping them to do bookkeeping, is also helping them to do engage their customers, helping them to manage their employee welfare, and also gives out that delivery services that is required. So this is what is happening more on the B2C space. And this is very fragmented, but the startups are trying to bring this together or puts in place a structure for this by partnering international giants like Meta. Also, we've seen the trend where some of these e-commerce or retail tech players are digitizing the traditional community. And by this, I'm referring to the mom and pop stores. So we take the case of Omnibiz, which actually helps to bridge the gap from the manufacturer straight up to the community level retailers like the mom and pop shops. Omnibiz has about 90,000 retailers. They have about 1,500 field agents. They are present in over 135 local government areas in Nigeria. They are supporting over 200 brands and currently operating in Nigeria, Ghana, and Kenya. They provide a whole ecosystem that helps to digitalize the value chain from the manufacturer to the retailer. They provide a micro stock point engine for the retailers. They also help to provide a crowdsourced logistics so the customers do not have to worry how they get a product. They provide financial services and also help them to be able to even buy products on credit. So we've seen also some of these fintech players or those who avail lending come in and take advantage of such platforms to be able to avail credits to these retailers. They also provide analytics engine that helps the customers to be able to tell which product is moving faster, which ones they should stock, and also helps them to be able to predict the market. So Singapore companies that have solutions in terms of IoT, in terms of credit analysis, anything that comes in to be able to help such platforms may want to explore opportunities in the region. Overall, we looking at B2B and B2C. B2B is currently growing faster because the average African likes to pick the product and then see it, and they are still very connected to the retailers. So enabling that manufacturer to retailer value chain is doing very well now. However, we see that the market of the future is actually B2C. And with this, we see that Amazon has announced intentions to come into South Africa and Nigeria. And we foresee that this would really impact the market when they start their retail when they start their e-commerce business in Nigeria mainly. When they start, we expect that MNC clients that produce or that are using the B2B services like Market Force and Omnibiz are going to stick to it. But the small and medium manufacturers that are in the sub-region would like to shift to a global player like Amazon. So with that, we are going to see that the activities of the B2B players is going to slow. Also, we see that the B2B players will have to modify their business to enable B2B to C, because at that point, with Amazon coming in, we expect that the B2C side is going to evolve. There's going to be a lot more of buyer confidence. So the buyers would like to opt for Amazon And as a result, they are going to buy more online. So if the B2B players do not enable their retailers to do B2C, then we see that they are going to have a lot of challenges. So we expect the B2B players to modify their business value chain. Also, with a big player like Amazon coming into the market, there's going to be a talent crunch for both the B2B and B2C players that are already existing in the market. Some of the good sides that we expect that Amazon coming to the market will bring is that it's going to boost e-commerce awareness and buyer confidence. We expect also that it will dampen the growth of social commerce, as most of these people would like to rather subscribe for Amazon services and sell from there. We also expect that it's going to create a cohort of third-party service providers, because Amazon, we anticipate, is going to use some level of third-party service providers, and this would also be available for other B2C players that are in the system to be able to subscribe to such services. And then it's going to create an avenue for cross-border e-commerce in the sub-region. Currently, it's difficult to have a product that is listed in Nigeria that you can buy from Ghana. But with Amazon coming into the play, we expect that in line with their expansion plans, they are going to offer such services across borders, which the market is going to be very grateful for. Overall, we've seen both the e-commerce and the B2B leading players actually building integrated ecosystems to enable growth. We've seen the likes of Alezo, which has some Singapore interest, actually acquire payment companies to be able to boost their growth. Also, we have players like Konga, which is strategizing from doing the regular e-commerce to venturing into things like, the health industry. We have Jumia partnering with Zipline to do drone delivery in Ghana, because they intend to be able to reach more customers. So these key players are trying to pull in everything, whether it's a sector collaboration, whether it's an infrastructure collaboration, some form of innovation, to be able to get access to the markets in any way. We have some of the leading players actually partnering with a Singapore live streaming company to be able to offer live streaming solutions to their clients in the sub-region, actually across the continent. So these are some of the integration and collaborations that are happening in the region, and we expect that Singapore companies that have some form of e-commerce support solutions would like to explore opportunities in our region. So let's take a quick SWOT analysis of the industry. This market has a huge consumer base, which presents a lot of opportunities for the growth of e-commerce and retail. There is increasing acceptance of e-commerce and retail tech. There is a dynamic fintech ecosystem to support the payments and requirements. There is a growing logistics and delivering ecosystem. As I mentioned earlier, Zipline is a drone delivery company, and they are now partnering with the biggest e-commerce player in Africa, Jumia, to be able to do drone delivery in Ghana. There is improvement in terms of digital addressing systems. Ghana has launched a digital addressing system that helps to be able to do such very accurate deliveries across the countries. The weaknesses are the cost of logistics. Actually, we understand that last mile B2C delivery is 5 times more expensive when you compare to even their own B2B players in the region. There's also, for other markets, there's also the lack of good addressing systems. There's low awareness of e-commerce, and there's also a lack of uniform identity verification. This is being corrected in a way, as we see Ghana now has the Ghana card, which is more like a national ID system with proper database for the whole country. Nigeria is also deploying the BVN, which is bank verification number, to be able to support financial transactions. So we believe that these are also going to be corrected to help the growth of the industry. The threat in the industry is what we call locally what I buy versus what I get. So people, as a result of this, there's low trust. Cybersecurity and data breaches are also another threat. We also see that there are several actual e-commerce players, and this is bringing a lot of competition, which may lead to crowding out in the near future. In terms of regulation, there is not so much of clarity on regulations in areas like tax application and other forms of standards that can be put together for the industry. The opportunities are enormous, starting with intra-Africa cross-border e-commerce, the online price comparison tools, the loyalty rewards and systems, buy now, pay later options. There's also e-commerce marketing tools and training and skills development. There's digital consulting and debt and equity financing. So let's look at the e-health space. E-health solutions are geared towards enabling easy access to healthcare and health data. So the digital fitness and well-being is actually the largest segment when it comes to health tech in the region in terms of revenue size. You know, with the COVID pandemic, it's positively accelerated growth in the digital health markets by making healthcare and self-monitoring of health conditions more accessible to the public. This has helped digital fitness and well-being to lead the health tech sector in the region. According to Statista, a global market insights company, revenue in the digital health market is projected to reach about $830 million in 2023. The accumulated annual growth rate from 2023 to 2027 is expected to be about 15% and bring the industry to about 1.47 billion in the next 4 years. However, the average revenue per user is relatively low compared to global trends. It's actually about $18.21, whilst in areas like China, it may be in the thousands. Health tech development in the region actually started with improving health records at clinics. This was actually focused towards enabling efficiency in the healthcare delivery process. The current phase of development is focused on bringing convenience and price discovery. We have health tech companies such as M-Pharma, which raised about $40 million last year, helping to source medicines cheaper and also helping pharmacies to be able to stock only the relevant medication and providing financing. With this, they are taking out the traditional distributors out of the value chain and enabling more of price discovery to the pharmacies or the local level, community level chemists that we have in the various regions. The company is currently in about 5 African countries and expanding through acquisition of pharmacy chains and partnership with health centers. We also have Health Tracker, a Nigerian fintech that raised about 1.5 million last year, offering over 500 different lab tests from the comfort of clients' home. They come to your house, take your samples, do the lab test, and you have your result in 48 hours. And they offer complimentary doctor consultation to guide clients. In terms of the efficiency side, electronic records management is actually quite widely accepted, both in the private and public sectors, especially in Ghana. For the public side, there is a national health platform that has been deployed to most of these health centers. But at the private side, these companies subscribe to various electronic records management systems, which they use to manage their data. Looking at the whole trend, we've seen a lot of telemedicine solutions coming up, and this is actually looking at the direct to customer distribution, We also seen a lot more of digitally enabled direct to customer distribution. I mentioned M-Pharma. There are other companies that are helping for people to be able to buy medicines online or to be able to go online and buy some form of medication. This is mostly treated separately from e-commerce because of the regulations that come around the healthcare industry as a whole. And some companies are also specializing in the fulfillment of the needs of the healthcare industry. When it comes to looking at the SWOT for the whole industry, we see that there is a big opportunity for traditional pharmacies to be able to integrate into telemedicine and other healthcare platforms. Currently, what we have is that telemedicine players may have their own drug dispensing solutions, which is not accessible in all spheres. So today I can be about 30 kilometers away, or let's say 100 kilometers away, access health care via telemedicine, but I cannot get the medication. Where we see the opportunity is that bit of back-end integration to enable the telemedicine, your regular dispensary or pharma bit, health insurance, logistics, having that bit of interoperability such that I can have my telemedicine or my consultation online with a certain service provider, but because they do not have the medication in their database or in their pharma, they don't have stock of that in their pharmacy, I can, with that same solution or with that same app, I can get a solution or the drug delivered to me by my local community pharmacy. So if there's a pharmacy that is just within some few meters or kilometers from where I am, I should be able to refer and say that, okay, or see an option that tells me that this medication is available at this pharmacy shop, which is, let's say, 2 minutes walk away from where you are. So I can go pick it. Now, we've seen a growing trend of health insurance. So this medication I'm taking should be covered by my health insurance. So on that same platform or with that same solution, it should be able to send a prompt to my health insurance company to be able to cover this expense. And where there is the need for some level of logistics, let's say it's about 1 kilometer, 2 kilometers away, then we could have a local logistics player get the prompt to be able to deliver this to me. This is a big area that we see, and we're getting a lot of requests from the local pharma players because they are very much sparse around on the ground to be able to plug into such areas to be able to serve the needs of the market. The weakness that we have seen is that with the rapid growth of telemedicine, not all health insurance companies are willing to cover the telemedicine consultation because there is not that level of coordination. It's like now health insurance companies have to deal with so many telehealth service providers. There's also restriction when it comes to the health tech area due to access to infrastructure such as internet connectivity. So you see a lot more of those in the cities and urban centers subscribing to health tech solutions compared to those in the rural areas. Also, one big general issue is solutions that can help to deploy prescription drugs. Currently, some of those e-pharma, so online pharmacy companies, what they are doing is they are only able to sell over-the-counter drugs because they don't need prescriptions. How to get the prescription online, how to verify if the prescription was issued by a right entity, let's say a clinic or a certified doctor, and then based on which offer the drugs to the customer is a challenge. So most often, if you have a prescription, which is usually paper written, or printed out for you, you would have to walk into a pharmacy to be able to deploy or to be able to access your medication. Some of the threats that we have in this area is the lack of clarity when it comes to the regulation in the industry. Also, cybersecurity is a problem. But in terms of the strength, we have the whole growing digital adaptation of the industry. So our last part actually has to do with EdTech, and EdTech, the strength over the years has been with school management solutions. So more of school management solutions have been adopted. With COVID, we saw a quick rise in the adoption of various learning management tools and content services. However, this has sharply fallen. What we see now is a growing trend of tech training service providers who are actually offering tech training to be able to bridge the tech talent gap. Key players in this area, we have ALX, which is partnering with players like MasterCard to be able to offer their training solutions. They offer scholarships for the training. Also, we have players like Alt School also doing some collaboration, and they are also partnering with the offline players. So they partnered with a school in Ghana called Open Lab, which is like a physical school where you go for training, and they're doing such partnerships so that Open Lab can offer online tech training across the region. So these are some of the opportunities and the threats, but the major threat is the lack of assurance when it comes to the quality of education that is being offered in the area of technical trainings. Opportunities are wide. There is high demand for training and placement solutions. There are also opportunities for distributorship or collaboration, especially for content providers. If you want to excel in this region, you would have to consider partnering, especially the SMS, the school management solution providers, because they are already in touch with these schools or the market, and then you can leverage them to be able to deploy your solutions to their existing clients and then also their future clients. So we do a quick run of the summary of opportunities that we have in the whole West Africa ecosystem. There's opportunity for digital banking stacks. Most of the tier 1 banks are looking for digital banking solutions. They want to build their own digital banks separate from their current banking operations. There's also room for multi-channel based customer engagement solutions, mainly looking at wallets, cards, and e-transfers. There's opportunities for digital onboarding, eKYC, AML solutions. There's also the operations opportunities for interoperability, especially around fintech, e-commerce, and e-health. Report automation is also a big area. Fraud, risk, and cybersecurity is another area. Partnerships for micro-lending, buy now, pay later, payments and remittance. IoT is a big opportunity and is required in the various spaces, various sectors in the region. And then in terms of the various investment agencies that have startup investors that are here with us today, there's a big ecosystem support for acceleration, investment, debt, everything that you're looking for. There's a huge opportunity there. For data players, there's a big opportunity around the data center space. Mobile device distribution, sales, servicing is also another area that we can look at. So I bring this presentation to an end and say thank you so much for your time. And I open the floor for Q&A. Thank you. Can we have the questions?
Yeah, Clement, you have a question on Q&A here. asking what is the income in USD of the population between low income group and middle income group and high income group. And also in terms of cost of living, selling of a can of Coke, McDonald's burger, KFC, etc., and the salary of university graduates in like courses like electronics, engineering, and business grad.
Okay, this is trying to get my. As it stands now, in terms of income brackets, we can roughly put the middle income as the largest. I will have to refer to be able to get the right data and the percentages to look at. But the lower band for the continent was actually put at less than $2. And then the middle band was actually quite a big span. I'll have to really refer to be able to give you the accurate data. So Augustine, happy to respond to this offline. Also on question 2, I see how much selling of 1 can of Coke, McDonald's burger, 2 pieces of meal KFC. Okay, so 1 can of Coke is currently around about 80 cents to $1, depending on where you are buying, whether you are buying from the informal markets or you are buying from, let's say, supermarket outlet. For McDonald's, we don't have McDonald's here in the market, but we have KFC and 2-piece KFC, which is KFC Streetwise, is selling for. Jean, will you help me on this?
The key, sorry, am I on mute? Okay, I'm not on mute. The key pricing of average kind of fast food meal, you are looking at anywhere from a 30 to 40 CDs. So maybe a McDonald's meal converted to US dollars will cost about $3 minimally for like a 2-piece chicken. So thereabouts, that's the lowest starting point, and then it climbs from there. But most of the time, in terms of minimum wage, on average in West Africa, minimum wage, even in Ghana, is about $300 US. So you can see that as a lowest ranking, as a low bar for minimum wage, it's about $300. So the income bracket starts from there.
Thanks, Jean. This question is.
Sorry, I saw just so that I was actually replying. Key sources of energy in West Africa. This currently, in terms of energy wise, the energy mix, it's still the bulk of most of the West African countries are still in terms of traditional energy, so fossil fuel. But countries like Ghana have transitioned quite well into balancing the energy mix. So about 30% renewables is what we see in terms of the more advanced countries. So even within Ghana, within Ivory Coast, within countries like Senegal, they tend to have a portfolio of energy mix about 30% in renewables. That will include solar as well as hydro most of the time.
To add on, Jean, in terms of the energy mix, we've seen a lot more push also towards gas because the region is very rich in gas. So we have a lot of gas-fired power plants coming up. This is natural gas. So they are moving from your typical heavy crude to heavy fuel oils to a lot of gas. Okay, there's another question on corporate tax rate. This varies. The general thing for a market like Ghana, tax rates is between 15 to 25%. Industries vary. It varies for industry. It varies for location. So I give you an example. If you have an office that is located in the tier 1 cities or in the city centers, you'll be paying about 25% tax. and that is subject to your industry, but the max will be about 25% tax. And if you move your office to, let's say, a rural area, you could be paying as low as 10 or 15% tax.
There's another point here in terms of the energy and how inflation changes in the next 2 to 3 years will actually affect energy prices and digitalization efforts. Clement, you want to comment on that?
Okay, the region has actually had some of its highest inflation in the last year, and inflation is actually expected to go down. There's been recent adjustment in energy prices, so any future as that adjustment is not expected to increase as much as it has over the last 1 year. We do not see that the cost of prices would actually affect the the increase in price in energy prices would affect the digitalization effort. This is because for key players like the telcos, they are moving more towards the renewable sources of energy and other forms of cheaper fuels. There's abundance of sun, so a lot of these telcos are now moving towards using solar solutions in that area. Also, at the individual home side, there are various price brackets that protect the low income users. So what we see is that people would rather shift away from heavy consuming items like air conditioning and all this kind of stuff to be able to keep their devices alive. So in this area, we do not expect. We rather see that a lot more of digitalization will happen in this area. Energy prices, we do not see it affecting the market.
To answer the question on, there was a question on the salary of university graduates in EEE and even in business. On average, it's about, you're looking at about 36,000. 36,000 will be considered for a Bachelor of Science, and this is a per annum salary. Bachelor of Arts or even in business, so it's about 30 to 36,000 from where we see the market range for such courses or course graduates actually.
So Augustine asked another question about the residential and industry electricity tariff rate. We'll get back to you on the details when it comes to that as well. Okay, I guess we are done with the Q&As. No more questions. Hi, Peter. Yes, there's a pool of qualified cybersecurity system integrators that you can tap on. Just last week, they had the CISO summit here in Ghana, and there's a similar association in Nigeria that you can tap on when you want to enter these markets. Yes, so there's a group of, let me say, system integrators for various functions that you can look to. Okay, so we will flash our upcoming events. And the first one is a digital mission to Africa, mainly Morocco and Nigeria. So the first one, with this mission is going to be from 24th May to 2nd June. And from 24th to 26th, we'll be in Nigeria to be able to connect Singapore companies like yourselves directly to systems integrators, fintechs, e-commerce players, whichever may be relevant to the companies that are coming on the mission. And then from there, we hope to get the companies to all come with us to Morocco to attend the GITEX Africa 2023, which is the largest and most inclusive startup event on the continent. So we are combining these two missions on one shot, but companies are free to opt for one or take both. Companies are free to opt for any of them or take both together. So we will be very happy to have you with us at the end of May to explore opportunities in the market. We are doing Nigeria, but yes, most of the players in Nigeria also have expansions in Ghana. If you have specific interest in Ghana, in any of the other countries, Senegal, Cote d'Ivoire, any of the other countries in the sub-region, we are happy to support you. If we can drop the poll on so that the companies that are interested to join can express interest for this mission. So if you would like to join this digital mission, let us know. The second event is the Africa-Singapore Business Forum, which happens on the 29th and 30th of August. So you are all invited. You are all invited. There is the opportunity to sponsor, to be a sponsor for this event. This is our flagship event for the Africa team of Enterprise Singapore. It's going to happen 29th, 30th August. There are going to be several side events. There's going to be B2B matching as well. Sponsors, of course, would have their special rights, which we are happy to discuss in more detail with you once you have expressed your interest for same. You have the QR on your screens, so you can register now for Africa Singapore Business Forum, and we will be very happy to have you. Okay, so we are going to end the poll. And those who would like to still scan, we have it on your screen. But at this point, we want to say a very big thank you for being a part of today's session. The slides for today's presentation will be shared for all participants to be able to have access to. We will be available for you to be able to reach us and express your interest as well for the market. If you have any special questions, we'll be happy to take them and respond to them. If you have any leads in the market, you need us to help you to realize these leads, we are happy to help you as well. Thank you so much and do enjoy your evening. Mm-hmm.